Welcome back to my channel. In this video, I'm going to cover Kroger. They announced their earnings before the market opened this morning, and I wanted to take a look at their financials, see how the company's been performing, and see how they guided for the year that's coming. Kroger is a grocery store, and they're a good, stable business. They also have been a very good performing business. They've gone up 95% in appreciation and have paid a dividend. So it's my single consumer staple stock in my portfolio. I'll take a look at the value of Kroger. And if you haven't looked at one of my videos, I value companies based on their future cash flows. And I put together a forecast cash flows and I discount those cash flows to today's value. I also look at earnings per share, but mostly value a company based on cash flows. Kroger is a really simple business. They do groceries, but it's very big and it's very stable. And it's going to be a necessity for a long time. We're just not going to stop eating food. We're going to need it. So that's one of the reasons I own the stock is it's a very stable stock. There's a lot going on with federal policy, tariffs, and we have seen an economy that's slowing down in the US. I saw a forecast from the Atlanta Fed this past week that showed that we may be going into a contracting quarter. And that could really be concerning overall for the economy as well as the stock market. And holding a stock like Kroger during a time when you have a contraction is a really good thing. The last time we had a down market, Kroger did really well. So that's one of the reasons I keep Kroger around. It's not because they're a high growth business or they have an exciting product portfolio. No, they're just a really good business, and that's why I keep them in my portfolio. The earnings. The earnings came out, and I read them before I read the market's reaction to them, and I actually believed the earnings were good. Here's what I liked and took away from the earnings. The sales growth was good. 2.4% in the quarter looked good, and 1.5% growth in the business for the whole year last year is also good. Again, this is groceries. It's not, Meta growing at 25%. And the other thing that I liked was they actually expanded margins a tiny bit. This is the grocery business, so they're not expanding the business a whole lot. They also have been buying back shares, really well. So they're taking shares off the market and making everyone's shares just a little more valuable. The company did have some news that was already announced before the earnings that the CEO was let go by the board. He did some things that they didn't approve of and they let him go. One of the things that I will say about Kroger, and I've said this before, is I really like their partnership with investors. You see that in their earnings, the way they communicate, and you see how the CEO information, they got it out there quickly. They did not keep anything from investors. They're like, hey, we're going to let the CEO go, and they let him go. Now, that's bad news. Letting go your CEO unexpectedly is not good, but it's been done. So it's a bit of bad news that the company had to deal with. So as mentioned, gross margins did grow, which was very good. They expanded their margins, and that really is meaningful when you have a business as large as Kroger. The free cash flow guidance was very good, and that's what I'm trying to find here for you. Here we go. The guidance for the year that is now beginning, they ended their fiscal year at the very end of January, very beginning of February. So the new fiscal year that we're in, they're expecting growth to be about 2 to 3%. That's typical. And their free cash flow is actually a little higher than what I was forecasting. So it updates the forecast to the positive. So that looks good. Overall, again, I took away when I read through the earnings that this was a positive earnings report. The business continues to do well. And I'm going to update my analysis with the information from the new earnings. Now, I'm a believer that I need to have a process that I should follow and be consistent with so I can continue to be better and better as I make investments. And I encourage you to establish your process. What are the key questions you have? I like to keep mine simple, and I like to show that to you. First and foremost, do I want to be an owner of this company? You're going to be a part owner as a stockholder. Do you like the industry? We get to pick from thousands of stocks, and we should be careful in which industry we want to invest in. Is the company I'm looking to buy into a good business? Is it growing? Is it performing well? Is debt under control and less than 3 times EBITDA? And I want a discount stock. No sense buying a great business at a premium. That's easy. But having the patience and doing the due diligence of knowing what a business truly is worth based on its free cash flows, then waiting for a good solid dip in that stock or a pullback is really a good idea. Charlie Munger famously said that if you just look for great businesses and look for a time to buy them when they've gotten to their 200-day low average, you do very well in investing. And I agree with him. So overall, when I answer those questions, I then make the decision, would I buy that stock today? In the case of Kroger, I'm already an investor. So I guess the decision I would be making is, would I sell, would I hold, or buy more shares? Kroger is a $45 billion market cap company. They have $150 billion of revenue. So you're buying a big business, which is $45 billion. And they have performed really well over the last 5 years. Now they're up 102% and you get paid a dividend. This is getting it done. And the upward trajectory is what I really like. I'm a long-term Kroger stockholder, very satisfied with how the business is operated and rewarded me. The forward P is only 13. Beautiful. And analysts agree that, hey, the stock's a little discounted. So I'll do my own analysis and tell you what I think, where I think the stock is priced. When we look at the business, it is a slow grower. This is not Meta, Google Alphabet. This is not Robinhood or Nvidia that's doubling in 1 year. And that's expected. They produce great free cash flow, and I'll show that in a bit. Analysts, there's some that are optimistic about the stock and have a price target up around $75 per share. And there's a couple bears out there that have the stock priced at $48 a share. But in general, they're seeing the stock as a good buy and it's discounted. The forecast for sales for Kroger, it's just more, low single digit growth and expanding of earnings per share. So Kroger's just going to do what they do. They're going to keep expanding profits. They're going to be consistent. It's a stock that I can really depend on. It's just going to be a nice, stable stock. And as mentioned earlier, if we have an economy that's in turmoil, it's in, a little bit of hot water, Kroger is a pretty good business to have. Everybody's going to need to eat. The tariffs are not going to impact Kroger directly. I know that the president announced that there would be tariffs on Mexico as well as Canada, but they now have excluded food out of that tariff list, which is really important. If you think about food, we get all our avocados from Mexico. And speaking for myself, I'm a fan of the avocado. I eat avocados every week. It's healthy and delicious, as well as vegetables. We get a lot of vegetables from Mexico. So I'm glad that they took that off the list because that would have affected inflation, food inflation, which is a really bad thing. We've already been dealing with egg prices that were too high. So overall, I expect Kroger is going to do just fine on the revenue line, and they're going to continue to expand their earnings per share. Now I'm going to value Kroger, and I'm going to use a forecast of their cash flows as the principal way of establishing a value of this business. And then I'm also going to look at earnings per share. The free cash flows have been very reliable for Kroger. They guided that they're going to do about $2.8 to $3 billion of free cash flows. So I'm taking the $2.8 billion and growing it by 4% because this is a forward projection of cash flows. And I'm growing cash flows in the first 4 years by 4%. And then after that in terminal value by 3%. So my model is going to expand cash flows over the next 4 years. Then we'll have all the cash flows after year 4. Now, those cash flows are going to be in the future. So we want to discount those cash flows by a discount rate of 8%, which is what I want to use with Kroger. It's a very good business. The net present value of all those cash flows, today's value is $56 billion. I'm going to add cash on the balance sheet and take away debt and get to an equity value of $43.4 billion. dollars. The market cap is 45, so there is a small premium on Kroger. Interesting. Now, earnings per share have been expanding very nicely, and it's expected they're going to do $4.92 for this year that we're already in. I'm going to use a P as 16. It's a quality business. They are dependable, reliable, good stock to own in a recession. And I'm only going to grow those profits by 2%, which is a little conservative. And even when I do that, I get a 28% discount. So overall, when I blend and I use more of the free cash flow method in the blend, 2/3 free cash flow, 1/3 earnings per share, I get a discount of 7%. Analysts on average were roughly at 6.6% discount. So we're agreeing on the fact that Kroger is a discounted stock, just a little bit, not a drastic discount. This is a consistent company, so it doesn't surprise anyone. I showed you the chart over the last 5 years, upward consistent trajectory. So really dependable business and a 7% discount. Now, as investors, we get to pick from thousands of stocks across many different industries. And there's a different desirability of companies. And here I put together kind of a quadrant of desirability. In green are businesses that are almost monopoly-like. They have few competitors, and those businesses have great power to keep growing, keep expanding their profits and cash flows and so forth. The ones in the gray are good businesses, but they're not quite powerful monopolies and those businesses might be a good investment but are just not going to be the super desirable ones. Then you have businesses that are undesirable, just excessive competition, low margins, just undesirable. Think of automotive, car manufacturers. I don't like utilities. I put them down there because they're just so darn unprofitable. Where do I put Kroger? So Kroger I put squarely in the gray. It's a good business, but it's not a business that's putting its competitors, under because they're so darn good. No, they have competition, but they do have a good place in the market. It's going to be very hard to replace Kroger. They are established business in many different communities. I've been a customer for a long time and think that they're going to be around for a long time. So I put them squarely in the gray, not in the super desirability quadrant, but just in the gray. So let me make a decision on Kroger. I'm already a stockholder. What should I do? So let me kind of go through the process here and make a decision. So do I want to own the company? Is the industry good to invest in? The answer is yes, because Kroger is a nice, consistent company. And in my portfolio, if you've seen my videos and live streams, my number one position is Meta, Google Alphabet. I have things like Robinhood, which has been such a great stock for the last 12 months. Coinbase has been stupendous. Alibaba. Those are really cool stocks, but they're also riskier. But this stock is nice and stable. It isn't going to do much other than just go up in value. Nice, consistent, open value. This business is growing. It's operating well, producing more cash and more profits. I like that. Debt is well below 3 times EBITDA. There's a tiny discount on the stock. So this is a good buy stock, in my opinion, and a good stock to continue to accumulate. I have been shying away from consumer staples. It's just not a cool industry. But once we hit a recession, all the cool stocks sell off and they might be down 25%, if not 50. And Kroger will stand up tall and be like, hey, we're not one of the cool kids, but we're just going to keep making money during a recession. And that stock price is actually going to fly up because a lot of investors will flock to safety. So this is a good stock for me. I have a buy on it. And that's my story on Kroger. I hope you found it interesting. And remember, I'm just an investor, not recommending you buy, hold, or sell Kroger. Just sharing my analysis with you, and I hope you found it interesting. Thanks so much for watching, and good luck investing.